I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is October 31st, Tuesday, 2023. Happy Halloween for whoever celebrates that. So we took out previous day's high right there, and on the 4 hour, this is the 4 hour, you see that the bodies do close above the gap, which is what we're looking for. But we want to see it more on the daily, but the 4 hour is still good. So I mean, we're not that interested in this area anymore. But and then as far as we obviously have some big news on tomorrow. We have 8:15 a.m. We got non-farm, and then 10 o'clock, we got manufacturing and jobs. And then we have FOMC at 2 o'clock, followed by 2:30, probably Powell speaking. So I'm expecting tomorrow for the price to drop when the 2 o'clock comes out, and then up until about 2:30, let this guy start talking. Most likely will be being bullish, which I'll get to in a second. But and then yesterday, so you could see, I was mentioning dollar yesterday coming down. Why does it do that? I don't know. Okay, so dollar comes down right here. And then I was mentioning that it would hit this weekly imbalance, which would be sitting right here. And then price does come down. And then comes back up and then gets up into here. So that pretty much panned out. But a little bit off as far as the way we delivered. So the idea here that I was mentioning was, we would try to pop up and take out that high. And again, not all tomorrow for this price action, but what did we do? We came down one more time to get into, actually we came a couple times down, but get into this, got back into this opening week gap, and then we came up and then finally took out those highs. So let's go back to, where is this here? So on the 4 hour here, you see that, right? And then now we just opened up, and then we've pretty much consolidated in these past 2 days, but they're inching their way up slowly. 3 drives, and do we get another one here? We'll see. We'll get into that. But as you see, the body's respecting here. Look at the 4 hour body's respecting that gap right here, and then and also we're in this big down candle here. And then came up and took out highs. So let's go into a smaller time frame so I can try to make this short. Where are we here? Right here. So on the 5 minute, you can see that we opened up and we gapped a little bit, got printed on the chart, came down. We came to this area down here, and 25% pretty much of the gap. I mean, you're missing it by a point probably. But and then that's Asia, and then they decide to engineer liquidity there, and then they make a high at pre-New York. And when the price is up here, we know we're in this up candle, but we know we got this liquidity built right there and right there from yesterday. So shakeout day pretty much. At the same time, it's just, in this sense, it's consolidating, and you could see, was this a 5 minute? Yeah. So you can see that even on the 15 minute here, even if I was to use this old gap, 50% of that would be right here, just eyeballing it. You can see the body's respecting that, right? And that means we're up here, showing up here. And 8:30 kicks in and then pushes the price down. So for you to get in early, I wasn't ready by 8:30, so that would have been great if I was. But I did see the order flow here though. You do get a resistance block right here where we come underneath and come in it. So with the fib here, and there's so much to talk about. I don't know how I'm going to make this video short, but I got to do something different. But I know I say it every video, but you got to understand, I can't imagine how many mentors in the last 10, 20 years or whatever, they got to be tired of teaching. I just wish I could make it shorter. But as you see here, this price action does go underneath it, and if you do put a fib here, you'll see 50% above it. Even if you did it from here on a one minute time frame, you can see that we do get to a 50 right there. We're poking in it pretty much, and these are damn near almost equal highs, but they don't tap into that imbalance. This is just a 5 minute, but This is how I was looking at it. But then you see that we get into this wick right here. I'm gonna delete this fib. Well, I don't want to delete it. Let me move it to the side. So this wick right here, you can see that we're inside that. We don't break that high. So now it's 930 over here, 930. And to me, this is sells because of the fact that, well, I mean, sells for now because of the fact that we want to look who made money recently. So you could say those people here, but that was yesterday, right? And then as far as today goes, we have this price action from Asia and pre-London, and they made that nice low right there. So my idea is, number one, well, you have two ideas. You're either going to sell into here. You can still be bullish, a short-term bullish for today, but you want to retrace back into this range right here at the minimum. And I'm not going to put a fib here, but you could pick that level, whatever level you want. But then also not using the range, using the liquidity is more important. So as you see here, we sell into it, okay, and we take out liquidity right there, and we're at that 25% level, and then buys occur. So, and the intention, same idea. So we wiped out the people who made money today or recently, right? So when you're here, what are you thinking? I mean, well, me personally, I'm thinking, well, we want to buy up from here because it took out liquidity, and then we want to buy up and wipe out the people who are selling. So, and then what is the ideas there? I mean, again, same idea. If you put a range from here to here, you could do your 50 level, you could do up to here, and but you realize when you put these fibs, you don't marry these fibs. If we don't even have fibs at all, I would just be looking at liquidity, right? Liquidity, and even that high, and then at the ringer, we would come up and wipe out all those three sellers. So, and we input that high here, that lower high, that failed high, I'll call it, all today too as well. So look how many times we're bouncing. This is, even if this is all you saw in your price action, you obviously know this is consolidating, but they want to go to another direction, or let me not put it that way, breaking out to a direction. And I don't even want to put it that way. I don't look at this as breaking out either, but I do look at it as liquidity above, and I do look at it as a higher high as of now. What were we doing since we had the bottom here of hitting that gap? We've been making higher highs and higher lows. See that? So right here is a nice consolidation patch, but now they've purged the top side. So who's in effect right now? Definitely the bottom side is in trouble. But at the same time, that's a long story. I'll get into that in a second. But just trying to explain this here. Let me go to a 1 minute so you can see this. But if you want to wait for setups and forget liquidity, you also want to understand, after taking liquidity, you want to take a look at, okay, we got these. I'm buying in here because of this wick right here. See this wick, down wick on this is a 5-minute chart, so it's going to look different on other time frames. But on this 5-minute chart right here, this wick, see if I put a 50, see this 50% fib right here? Well, the price retraces back into that 50 level. And I have some support. I have some ideas with a smaller time frame and balance too. But this is how you can refine it. And you don't want to see price, if you want to be bullish here, you don't want to see price constantly break below the 50. Like, I mean, you see here it taps underneath it, right? You can see that. Man, every time I highlight some, it flicks. I don't see other people have that problem. Anyways, goes underneath the 50, and you see it's just digging in, right? Makes a swing low right there, but there's no bodies down here. If you were to be seeing that, then that would be a big difference. It would be more like, okay, we're gonna go chase that opening gap that's still there. You see this opening gap that's on the one? I'm sure you guys have been looking at that, like, oh, are we gonna hit that or not? They're dangling this carrot. This could be in a future time. This could be even in 6 months from now if we don't continue bearish and we just go bullish, for example. I'm just talking, not saying that's happening at all. I'm just talking. So it's important, but it's not important right now to them. Up here was. It might be important to us now. Now coming up with the news and the rest of this week. And if we do turn sort of bearish after maybe going up a little bit, they might want to attack that. Correct, because there's now all this liquidity sitting there too. This is a higher low. See if I squinch this out. This actually didn't take out that low even. See that? Look how close it is though. right? And obviously it didn't take out that low. But point is also is that this price action is sitting at a 61. If you look on the 1 hour chart up here, from here to here, retracing down, it's sitting at the 61, so it's constantly buying. It's actually the exact same level, maybe like a point off or two, not even. But so as you can see, that's where it is. And so the buy here, this is very key to see this. But I got to go to 1 minute so you can see it. But when the price does go up, so in the sell here, your intention is to take out liquidity here. So I mean, I don't have the line here. I should have put it here, but it's just too much shit on this chart, man. I don't know how else I could make this like without, looking crazy anymore. And then these indicators are kind of like fucking doing whatever they want sometimes. But I'm not using indicators. I'm saying for like just previous day high and low like levels. These like this dotted line. Like I don't need it there, but it puts it out. It puts it there automatically. Because it's day over. The day is over. It's 6:37. But anyways, so take a look. This 5 minute imbalance right here. Price does come back up and then retraces back in. So I'm gonna refine all this area. And if you look at this bearish candle, man, you look at this bearish candle that I'm hovering right now. If you take a look at the top wick, and 50%, we do come right back into it perfectly. So this is what the algorithm looks at. It looks at wicks' gaps and it'll reference that, especially at the 50 levels. That's why everything we do here is 50 levels or 25% levels and all that, right? So the algorithm is moving off of that logic. So it's not buyers and sellers doing that. How could a buyer and seller push this down to 50% of that wick? To the perfect level? Doesn't make any sense. Can't be buyers and sellers doing that. So that being, the understanding, so hopefully this opens your eyes, but we also have this support right here with this up candle right here. And then as it comes down and breaks through, it comes back as support. So you have this box right here as confluence. You have the imbalance for price to come back in. You have this wick right here with the 50% level, and it's a down candle, so it's a supply candle. And sure enough, you refine that. If you would have waited for it to hit the open, you wouldn't have got it. But let me go to a 1 minute so this will show you a little more deep in analysis. But as far as before we get there, this sell here, remember that this is that resistance block it's poking in. And then we poke in, we do poke in again right here. So that's holding the price down. And yeah, so that being the case, this is another entry. This is a beautiful entry. I stopped trading though. I don't want to be involved. Actually, to be honest with you, the market has been giving me a headache lately. And I need to take probably a step back. So, but to try to keep this YouTube channel going and all that. So that being the case, you also have the opening gap of this. This is NAS, obviously. So the opening gap of today. So that was the logic for me taking it here. Again, when I'm taking this buy, what's the logic I have? Well, we took out this low. If I'm buying, obviously liquidity up here, and above these two highs, obviously. But I'm not interested in waiting that long and holding and being involved in the market. I don't know what this thing is going to do. And I need to be nimble. So that's the logic. And especially with what tomorrow could show and do. So that being the case, I do like the opening gap hitting it up to here. I could have held it here, but as you see, it retraces back. I wasn't interested. But when I did see the precision, I was like, man, it's a beautiful trade, but I knew I wasn't going to be involved. I didn't want to be involved, period. So that being the case, let me go 1 minute. This will make all perfect sense better on a 1 minute. And then with the 1 minute here, you'll see that when we sold, and if you already got this level understanding, you see right here, even when it took 3 drives up, I saw this, I was like, that's a beautiful sell, but I didn't fuck with it. I was waiting for the open. But as you see here, this does pop in right into these down candles. So you kind of break a structure, so to speak, right here, right? Breakdown, retrace, breakdown. So when it's 9:30, I do have 2 breaks already, right? So I've got confidence on where we're going, and it's not long term or anything. I just know that we're coming down to wipe out these buyers, especially this level right here, this level right there, because everybody bought right here. They got in, they saw the shift maybe, and then this was a perfect opportunity for a retracement that held support. See this retracement here? See how it comes up and then it retraces back and doesn't take out that low? So this is where everybody's buying, right? Logically, for me, that's a place to target. Another place to target for me is hitting this gap. Now, but this isn't promised either, right? But what would be the next level after this? It would be definitely this low right here. So I wasn't involved in waiting. I wanted to secure profits, and I just took it when it hit here. And then it played around as well. And then you see another breakdown one more time. Now we're basically at that 25% level of the gap. Doesn't hit 50, so if you waited, you'd be asked out. So that's why you got to be nimble in your logic too. And then let me delete. Well, damn. Let me just move this over. I don't want to lose this. It's just, I know it's like annoying. So then, okay, so now that the 930 candle is right there, right? We pop up. Now we're in this imbalance and this last up candle. That's actually a really nice buy for me. I'm sorry, sell for me. But you know, price is moving fast. I don't have time for that. Let me do it this way. Let me do it red. I can just do it red here. A little too dark. But that block right there, you can see that we tap right into it. But the idea was for me as well as that imbalance, and that we're inside this. So this is another lower high. So lower low, lower high, lower low. Yeah, they had 3 drives up, but they were doing that on purpose. And you know, you're still stuck in this up candle right here. So you understand that on a smaller time frame, you have price action in between the smaller time frame. So you'll skip this on a higher time frame. You didn't need it, but this is just, I'm just explaining to you what the logic is for me when I see that. But then the price starts moving down quickly, and then I mean, for me, it's an entry. But also you could wait. This next candle, it does push up right here, and when this next candle pushes up, you're gonna be able to sell if you choose to not use that wick. I mean, it would have been nice if it hit that wick on that 1 minute time frame right there. But for me, this is more a confidence of price moving, and this was also sub second, so I can only explain it to you on this 1 minute. If I was to go on a smaller time frame, I can explain it. I'll do it right now just to try to make this video short. But and for me, you'll see here, I'm zoomed in on the 930, right? This is for you here. And this logic for me is this last up candle. So yeah, you have indecisive candle right there, but this is a supply candle up here, up closed, and then as you see, we break down. And I like pushing the button as soon as it breaks it. I mean, because I got a good entry. I'm confident in where I'm going and what I'm doing, and this is entry 1 option. So price does retrace back up. When it retraces back up, that's a perfect option right there to take trade for me. But again, this is 15 seconds, so I mean, you know, you're not going to see this on a 1 minute. And then I'll go back to 1 minute, but you can see that we do come under, we're also here sitting at that opening gap for today. And you've seen me make plenty of videos where this is a great trade to take as well. You could have pushed the button here. Let me go back to a 1 minute, man, because it's just again, I'm trying to, there's just way too much to talk about. We could be here for hours. So so that there's that. I ain't gonna explain that anymore. But you see the previous bearish candle doesn't break itself. It's constantly holding its lower low, lower high structure of not breaking its previous high of the bearish candle. You can see that. Look at the momentum here. Look at that. Every single one of these, you can see momentum as it breaks through the next previous candle. So we're down here, and watch this. So this is sick. This right here, you have on the 1 minute. We're on a 1 minute. So on this imbalance right here, you see the 1 minute. There's an imbalance right there. Price is poking in it. See how it's poking in it constantly, and I got this little box drawn out. Oh shit. See that, just so you can see the level in between. See that right there? So price is poking in. These bullish candles are holding. They're not breaking their lows. We're underneath 50% of this candle, but the bodies are also not too far off. And then the logic also is you're in that 5 minute wick. Do you remember me explaining that right now? That 5 minute wick down right here. This 5 minute wick right there. See that? See how I have this fib right here? So I understand that it's poking down at that 50% level of the actual 5 minute wick. And if I go back to a 1 minute, you'll see that this is you'll see that there's an imbalance sitting in between that right there. So it's tapping into that, okay? Tapping into that, right? You see that beautifully, okay? And then on top of that, price, this is a good buy for me, but price breaks through. Obviously, I'm taking it to where I told you as far as where would liquidity be. Look at the entry. Look how this comes right real close to the entry where I was at, because they know that, that's where they made the sell. You know what I mean? So I show you this all the time, but in general, this price reach when it makes this low and it comes up and it retraces back. Yeah, you're gonna take some liquidity that it built as an entry, because generally you'd have pushed the button right there, right? But what they'll do is if you have your entry there and the price comes up here, people will move their stop loss. So the retrace will come back into that little low. Damn, I wish this shit wasn't fucking highlighting all the time, bro. Like, what the fuck? I'm gonna delete this shit, dude. So you see that clearly right there? That low right there comes right in and then respects this candle. So, and it doesn't go below the open here of the bullish candle. I mean, it could, but it's not going to go too far if it does. And then, what was I going to tell you? The price, okay, buys up. Let me put the thing back. Could I? Okay. So the price buys up, and then what does it do? It retraces back. Look where it retraces beautifully. So on the 5 minute, this is an imbalance right here. This big box right there. That's a 5 minute imbalance. So I know the price is coming down. Number one. Number two, we have on this time frame, so 1 minute, we have this support block right here. So we had a low and a high and a lower low, and we break through it, and it comes back and acts as support. So the price does come inside this bullish candle. Why I picked this? Because it was the highest candle that had a wick above in this area. It's not the highest body, but it is. That you could have used this candle as well, but it just didn't work out well for me there. But the point is that the price does dip back into it, right? So let me delete this so this will kind of make more sense. But you'll notice that the high of this candle and the low of this candle, the 50% level of that candle is right here. That's not what this red line's for. I'm just giving you a ballpark. I'm going to delete this real quick. But this wick, look at this wick here of this bearish candle right here. See that fit? I got to go on a 5 minute because that's where I saw it. There's no way to make this shorter. There's no way. So you understand that this price action, when it came up and it retraced back, if this is going to be support, what does the algorithm look at as well? I have this last down candle right here with the lowest body right there. Now, understanding that this price comes in and it references this wick. So I got a 50 fib sitting right there on this low and that high of the wick of this bearish candle. So look how it comes right to the center of it perfectly. I mean, literally by the point. So if you would have waited for this body of the open of that bearish candle, you would have been asked out. So understanding that, yes, you're in this big down candle, a little refined lower is this one here. But then the algorithm looks at that 50% level. That wick is a gap. So it'll look at that as coming back to it as sort of speak fair delivery, in my opinion. And that's just what it references. So beautiful. I mean, look how perfect that is. It's nice. So this is to show you that, buyers and sellers didn't bring this down right to the exact same level as that. This just doesn't make any sense. So that being said, then the price does make another higher high and then retrace back for a higher low. For this right here, if you wanted to enter here, damn man, I gotta go to a 5 minute. Actually, it was sorry, 1 minute, and then right here, not only was this an imbalance right here, but you'll see that the price action, once it leaves, the fair delivery comes back and seals price comes back into this inversion imbalance. So I'm highlighting this to this, and you see it dragged out, and this would be a support area as well. Yes, you do have this imbalance, and you see that, and look at the details. Look at the bodies. They're sort of respecting the 50% level of this imbalance as well. But obviously the wicks can move out and push down, but the goal was for it to get here and then get back into this inversion imbalance right there. So, and even if you drag this out all the way, see how the price comes down, comes above it, comes down, comes above it, comes down, and then this holds as support. Even this inversion imbalance all the way over here. I'm just going to use that for now. You can see that, and you see how it hits 50% there. See how it's 50% right there of this imbalance, inversion imbalance. Well, this is the real support resistance, right? Like, forget using gaps and all that. That's also support resistance, but this right here is the real algorithm order flow where it is respecting. That's why retail, when they put like a zone like this, when it digs into it, they're winning because they understand that, well, they don't know what they're doing, but they understand that that could be a possible support in the zone, but they draw it randomly. Right now, what I'm doing is I'm not drawing anything random. So it's specifically going to specific levels that are used by the algorithm to continue order flow, whatever direction, right? So maybe a little TMI right there, but at the same time, super game. But just, you got to be able to refine this stuff here. And then these are the type of setups that you should be looking for. Forget trying to catch the bottom or the tops. And even if you see me doing that, that doesn't mean you should do that, especially as a new trader. Even as a regular trader, you shouldn't even be doing it. I shouldn't personally be doing that, but I do understand that what they're doing, just because I've been watching price so long. So, anyways, that explains here, and you could have nice, perfect buy right here. Again, another entry, another higher low, right? I mean, as you see, higher low, higher low, higher low. If you take a look, this is obviously breaking structure, not structure, but it's giving you order flow, and this is what you expect, right? Even this last down candle, you can see that we come up, we retrace back into it. 50% of that wick, see that? Look at that. It's not an accident. And it's almost the same exact level as that low right there too. Yeah, see that? And then price comes all the way back to the same exact level. Exact same level, right? And by a hair shorter, just to wipe those motherfuckers out. Because, I mean, there's algorithms that are using, there's expert advisors that are using this idea, and this knowledge, right? So, anyways, price breaks up, comes all the way back down, doesn't break that low, and you're still in this down candle, and then pops back up, and then if you see here, take a look at this projection. To get the high of the day today, it's going to be hard to do, but to show you. Let me move this back. How long has this video been going on? Fuck. Yeah, and yesterday, I'm sorry about yesterday's video being 50 minutes. I didn't want it to be 50 minutes, but for me to explain a lot of things here, I won't be able to make it shorter, and I'm sure if you're enjoying these videos and you're diehard to learn this and you want to be successful, then yes, watching this is no big deal for you. And yeah, it sucks to watch long videos, but I eat this shit for breakfast. So I'm just getting tired of explaining everything to this detail. But so right here, let me fucking move this. So as far as measuring the retracement for a projection up, there's a number of ways of doing this. Obviously, you've been watching the videos recently too, me showing you that, but I don't like to do this too much. But for here, what's the last retrace before going up and breaking? For me, you could say from here to here, right? From this low to this high, and then we bust through it and come back. Okay, so But there's also this retracement from here. I'm deleting this. This is super annoying. From this low here to this high. See how that's the last retracement down before we go up? Yes, this is a retracement down before we go up. So I'm going to take this. I'm going to just show you how it looks like here. And then, all right, so that's the last retracement down before going up, right? So if we do a projection here. Oh, I deleted them. Let me zoom out. Let me just bring them back. I'm gonna bring them back for the fucking purpose of what I'm trying to explain. If you use that retracement there, you could see that we overreach a 3 standard deviation, 3.5. You don't reach a 3.5 right there, right? So this, I mean, you could have still used this logic and got above here and got up to here, right? At least to the 3 standard deviation, right? And if you had put this here, here, just give me a second. As you see here, I'm gonna put it to this low right there, and then write that high right there. That high right there. See that? So see how we pop up and we retrace back down. Even if you put a fib here from a regular here to here, you can see that that's at a 70, right? I'm gonna move this over, but let me move this over. Fuck it. Move it again. I'm gonna do this from here to here. You see this range right here? See how it comes right back to a 70? Exactly to a 70. I didn't even use this in my analysis, but I know it was a 70. So look at that. See that? Oops. See that 70 right there? So it's in confluence with the 1 minute imbalance that's sitting right there. You see that? That I'm highlighting this box. Anyway, so I'm showing you when this pops up and then comes back. This is a retracement. So when you're trying to enter right here, you notice that they'll put these higher lows and then they'll come and wipe it out a little bit. I wouldn't even look for a trade until it did that. That's a model all in itself, just to give you the logic. But now I'm going to put this back, and I'm going to just so I explain myself with this fib from here to project up. Look where it goes, which is pretty dope. Damn, man, I tell you. Look how we get to this sixth the 6 standard deviation. We're shy of that, right? We're shy of it right there, and it doesn't show it. Where'd the other one go? Hold on a second. Hold on 1 second. Oh, that's so funny. So doing it this way here, from this low to that high, as you see, from that low to that high. This got very close to it, as you see. All right, the high, the actual high right here of the day is look up there. High is 503.75. 503.75. So this is 2.25 points higher using it that way. Look what happens when you use this low. And this is actually what I use, which is crazy. I didn't realize that I had it on the wrong level. I mean, it was not a wrong level, but look at the difference here. Watch what happens when I do this. When I move this from here to there, to those lows. Watch when I go back. It'll say 504. Look at that. Look at that. You see that? Damn, I got this stupid indicator there. Because now that's the high of the day. Well, there you go. My indicator shows you. It's the same level. Look at the 504 right there, 504. And look at the high here of the day, 504. Perfect. So, yeah, crazy how you could do something wrong. But anyways, yeah, so that's to show you that we ended up wiping out the top liquidity there. And fuck, man, I got to go to Dow real quick. You can see Dow Dow on the 4 hour, they decide to retrace a little bit, but then use that as a support right there first to bounce up, wipe out the top liquidity. They got all of that imbalance of the daily right there, and with the purple lines, and then that's including the gap as well. You have to include the gap when you have an imbalance. So instead of having that purple line here, okay, between that right there, this has a gap right here, so you're gonna want to raise it higher. And let me just fix that right there. All right, so price does reach up there, and then as soon as it gets up there, shy of that gap right there, and then you're in this up candle. This is the supply candle that you're looking at, and sure enough, pokes right in there and takes out that high, which is the last Thursday's high, the 26th of October. So it takes out that high as well, and then it immediately comes back down. And then take a look here. I'm gonna go on a smaller time frame so you can see it, but we came back. We're inside this imbalance right here, and then you can see this inversion imbalance. Nice, held nicely. Look how it pokes right in there and holds. I'm just gonna do whatever. So you see how it pops right in there as well and holds price and then shoots it back up. Let me go to a smaller time frame, and let's see what you got here. Yeah, explain everything. And we're kind of stuck at this 38 level on the fib, so it's pretty much holding price down. Coming up to here, we don't know, but we did get that double bottom, so to speak, on the oversold. So, and then we did hit this 50 level. So we're kind of consolidating. Obviously, they do that for the news tomorrow. So it pretty much the speakers formed right here. As you see this from yesterday's candle, this high and this low, we ended up coming down. We came up. We came, and then we came up. We came down, and then we came up. See that? See how they're confusing the market and just manipulating it. That's pretty much showing that, right? But took out that high there, and then we're here. Let me go to a smaller time frame. This is pretty sick too, if you understood what you were doing. Let's see here. Buy and trade Dow. So I should probably delete this. That's that inversion imbalance. So price is poking in there as well. I'm going to delete. Let me move this over so it's not in the situation. Just so you understand what this is. That's that level over there I was talking about. And then price. So we closed, made the video here yesterday, and then had a little gap. Price comes down. All right, comes down into this imbalance right here. All right, and then holds. Taps into this one here. All right, came a little bit low. Body's inside this one though. And this is Asia pre-London anyway, so I'm not even up or anything, but does retrace, comes back up to wipe all that out and take out that high. All right, and this is now 6:30. So pre-New York, not even started yet. And then waking here, okay? So right here you see a breakdown of that candle right there, big bearish candle right there, comes right back up, taps into the block. You also have those two down candles that's acting as resistance. So as you see, we break through and then it holds price. If I put a zone right there, you could see that it holds. I just don't draw everything. All right. So price holds, pokes into that, right? And then price breaks down again, makes another low. And then now you got these two down candles. All right. So the price, when it's even in here, you could push the button. If you're confident, if you know where it's going, which is where. Obviously, the goal is to take out this liquidity here. And then maybe get into that inversion imbalance and plus all this price imbalance right here. See this? See how we just rushed up? Well, they're going to come and efficiently deliver price as well. Look how they did it. So you see that this pokes up right here. And if you refine it to this one candle, would have worked too. The only down candle, it's a 1 minute, right? No, it's a 5 minute, I'm sorry. So 5 minute, yep, pokes right in there and holds price. And as you can see here, we have a little imbalance right there on this price, and then it just taps it. See that? See how it taps it literally? So that's not an accident either. They do that on purpose. But and then what do you call it? So now this is 8:30. If you were part of 8:30, price shoots the price down right here. And then now 9:30 actually starts with this bearish candle. When you're here, you could be looking at the same logic as kind of like this, pretty much. But you could say that these up candles are holding price right here, and then price shoots down and comes right back up into it. You can see that. You won't see it. You won't see it touch the actual blue candles right here with this 925. But you understand that this down movement here to move up is all part of the same movement. So it'd be like pretty much like saying you have a couple confluences in here, and that's why I was telling you there's so much to show you or tell you. But you have an imbalance here, this little one. I mean, it's tiny. Damn. All right. So you have that, right? And then also this break here coming back up, and price is holding there, right? So you could also look at it in a way where you had this down movement right here. I remember I was just explaining the same logic here. If you had did this, and there's a number of ways to do this to refine it, but you can see how it's poking in it, right? See that? If I refined it to just even this last down candle here, well, that's not the last down candle technically, but I won't get into that. That's just too much. But just to give you the idea, and you're sitting here, you're breaking through that daily imbalance level, but that's not really that important. This is a little overkill. But the logic is that it's just poking back up where this was a support bounced and then it breaks and then it's resistance, right? But what's the whole point of me telling you all this? You're going to take this trade down into liquidity right here as a first place. Now, what's your second place? Well, you see that we get 3 drives down. Well, this is a 5 minute, right? So you get more than that, but 1 drive, 2 drives, 3 drives, 4 drives. And with that coming down, you see the price action coming down and it's wiping out this price. You take a look at this down movement right here. This down candles right here. See this? Just this in general. This area to pop in. These are support. This is a demand. These 2 demand blocks, bearish at 12:35 yesterday p.m. and 12:40 p.m. Eastern time. This is yesterday. So I'm just showing you where we're looking at here so you're not lost. See these down candles? Okay, so that being the case, this wick right here on this candle at the 12:35 p.m., that wick, the algorithm is coming down and it's reaching that level. Look, and I put a 50 level right there. See that? So you can see that it's reaching it. It reaches it perfectly here. Comes back down again below. But why did it come below? Because it's number one, it's allowed to. Doesn't have to be perfect, but you want to see it respect that level. And then you can see that this candle, this next one right here, this 10 p.m. and it's 10 p.m. I'm sorry, 10 p.m. 10 a.m. This 10 a.m. candle pushes down here. Now we have time involved between 9:50 and 10:10. But this candle comes down inside that 1 minute imbalance with this big blue zone right here. See that? Not big. It's not big, but you see how we come right in there to tap that level as fair delivery or to balance the price. It's actually 50% almost of this actual imbalance itself in the blue. But we have that with we have this 50% level of the wick. You can see the body's never coming lower than that 50% level. And they just digged in. And then let me go to a 1 minute. I gotta be done, man. I don't know how to make these things shorter. But you can see here we got 3 drives right there. 1, 2, 3. Look at that. So and what's more important here is what I'm sharing you is the algorithm principles of what I just showed you there. So super game, back test this as well. And then here you'll see, man. Wow, damn, 44 minutes. So, um, when you're down here, this is the logic of buying, right? So for me, that would have been a great buy as well. And then, um, if you don't have the balls to do that, then you can wait for some type of setup. So because this is a setup in itself, but and what's the purpose of taking this buy? So let me just put a what would I have done if at the 9:30 here, for example? It would have been something like that. If I was waiting for it, this would have been nice as an example. And then as far as the buy goes, if you're not pushing buy here, right there, and then we use those last we use that last wick. See how this pops in? I've showed you million day examples of past days of it literally buying with it coming back in that last wick right there, the bearish one. Anyways, if you're looking for the setup here, let me just delete this shit. If you're looking for a setup here, you have on the 5 minute, you have an imbalance right here, right? And then price, if you didn't take this buy up to a 50% level or where liquidity is, definitely above the 930 where we sold. If you take a look at this, and this you don't even have to be bearish or bullish to understand this. Look look how when you bought here, look how it comes right to the 50 level, right? See that? I didn't even trade this, and I just knew it did that. Beautiful there. But again, you can still price can still get bullish, but this is from here to here. This is a minimum idea for me taking that trade. If you're not doing that, another logic is getting into here when the 5 minute imbalance right here, price comes back in it. And take a look here. I'm not going to even draw it, but you can see if you had 50% of this wick right here, see this wick right here? See how it comes in it? See how it comes 50% level and stops, right? And that's what you want to see. And you see it's still digging back into this imbalance right here. So these are all confluence ways of doing it. And then, so again, your goal could have been right there. If you want it to hold longer, then you sit through this, then okay, cool. Then you're looking for what's next. You got this liquidity here. You have maybe a price imbalance right here. You have the top here even. If you had 50% if I had a fib in here between these purple lines and then 50 level right there, that would be, I'm just totally eyeballing this. And then look how the price comes to there. If this was your trade and you were, like doing this, then you have these same ideas, okay, whatever your idea is. If you wanted to just take out that high, that's a trade in itself. Coming to the 50% level of this whole daily imbalance, that's a perfect level right there. This was kind of smooth. Remember this? Remember how they just tapped in? That would have been a nice target right there. I'd be like, oh, I'm done. That's nice right there. You could do that. Many ways to skin this cat, right? And then let me go to a 1 minute. Let me see if I can show you. Does it show more detail here? Yeah, I did. Yeah. Well, no. So on this 1 minute, if you saw it this way, price coming back. Oh, remember we had that daily open gap too. I forgot to mention that. So that was also a target right there. Forgot to mention that shit. And then it also sold. Did it? Wait, I don't want to get the assets confused here. 5 minute. Yeah, so you can see how we were when we were here. This is pre 9:30, but when we were here, you could have even took this sell because it was right there at the open of the day, and then you had this imbalance. This a 5 minute, yeah, and then you see how this up candle doesn't break this candle or this wick either. Just taps in, right, and that's just explaining that. So, the 1 minute here. See these last down candles? 1, 2, 3, 4. Look at that right there. You could have, even just put a line right here. Sometimes this works right here perfectly. No bodies below it. That's a immediate buy. Or if if that's your model, these four, or refined, this candle right there, right? This little down candle. It's a down candle, right? Comes in it, all right, and yeah, and then seals up that imbalance right there. So this is refined, right there. See that? Sitting in price is sitting in there, and when it comes back, it still sits in there too. Number of ways to handle this or look at this, but those are all entries. And yeah, man. So God, I gotta be done. Dollar, I explained what dollar did. Yep, right. And then as far as divergence goes, we had a lower highs in Dow, and that was the crack here when we were up here. And then when price retraced back for Nas, they took out the lows, and Dow took out the lows, but S&P made a higher low. So that was showing the strength of the day in general. Because remember, the S&P is what you want to follow, that what you want to trust, and you want to look for the divergence happening there off of the S&P. The S&P is what's most important, and the other assets they'll have their own different cracks, but you want to rely more on Nas and S&P. Dow is just fickle and does what it wants, and it's just not the same because of it being just 30 stocks in it versus 500 and 100 top tech here. But higher low here, so this shows you a divergence, and S&P was the clean one. I mean, you had the higher high, higher low. You had a higher high, you had a higher low. I mean, this is smooth. We want to see this. The reason why people don't trade S&P is because it's boring, and the ranges aren't as big. Even though the price action looks like it is, and it looks like the same, it just doesn't pay as much. I mean, and it does pay, obviously, of course it does, but it's slower, and it's and all this and that. So, but this higher low pushes it up here, and as you see here, we have a higher high here, and then right here we have a higher high right here, and then Nas made a lower high. So this was explaining also us pushing down initially, right? That's how I looked at it. All right, that right there. So this just to show you the sell, because we had higher high and higher high. This is a crack up here for the pushing it down, and then with lower lows here, that was, and then with the higher low here, this is pushing it up. And then when you're down here, you also had this confluence, which wasn't important, but I mean, I see detail. These are higher lows right here on Nas, and we have lower lows in S&P and Dow. See that little crack? That's some extra confluence. Once the price goes up right here and retraces, they both had higher lows. So if I move this right there, see that from here to here, they both had higher lows. They all had higher lows. So they were working in harmony with each other, and they were going. So that being all said, you're going to ask me, man, make this video shorter. What are we doing tomorrow? Listen, I don't know. But what I will tell you is that they've engineered liquidity here. I know this chart is busy, but what I'm expecting is dollar to shoot up. Let me see, where's dollar? Where'd it go? So with this example here, I would like to, okay, what I would like to do, what I would like to see, and what actually happens is obviously different, but I'd like to see them shoot this shit up right here. Right? I mean, and it being from here, I don't know. Can you retrace from here? Can you retrace lower and then pop up? Sure. I don't know. But the idea is this, as far as a little more bullish dollar. And then with the indices here, we're going to see, obviously, I mean, it would just literally just come down from here, right? Now, does it come down from here, or does it poke up with the news and pop up into there. Let me do this. Shit. You know, does it do this? Because I like this area. I like that high right there. It doesn't have to. And I like that 50. I just like this area for it to tap. And even a ringer, I mean, hit that. It doesn't have to though. So I don't know. Does it sell from there or up here? So that's the same idea of dollar going up. So that's the bearish idea. If it gets wild and it's just more of a bullish still stance, then I'm gonna tell you this. Where'd the dollar go? Then I'm gonna tell you that that we could obviously, let's just reverse this here. I don't see this happening though. I really don't. But let me delete this. Fuck. So they might pop up, clear that high right there. And then and this is coming down. This is to say if the indices were still short-term bullish, okay, which is still possible. Then I'm going to look for something like this as an example. So does it pop up and sell, or does it just sell from here? Okay, so if that was the case for the scenario of dollar, and in that scenario we would expect, I think I just told you, didn't I? No. Okay, so then that would be the case where we retraced here, and then we just kind of fly up here, right? Or it just pops from there, from here, where we are now, so to speak, right? But and then that's the case, and then we're kind of like we're still going on the overbought area here. We kind of retrace a little more healthier. Getting above that high, maybe sealing that, maybe getting above that high, maybe even taking out that high. I don't know, but this is just the idea here. So again, I don't know if it's going to retrace something like this with the news and it being volatile as hell. Could wipe this out first and then come up. So that's that idea of what I've been trying to share with you. And then also last thing I'll say is that we have this gap right here, and there's no price action here, closed. So we sealed this damn near, almost, but not on the daily, right? So do we end tomorrow or this week? Do we end up being closed above here or below here? And that's really what I'm also looking at. Yeah, you see how this on the daily, we didn't, this high, it could have tapped that. That would have been nice if it tapped that and been done. But it didn't. So this daily not showing any body of candle in that gap there could show me that we're still not done with the top side, and then the bottom side, that shows me that we're not done with the bottom side, obviously. But there's no price action there. So do they come down? So do we wick up and then come down? So the example I just gave you, $1. If it was bearish, that means we're bullish. Can it wick down here? Sure. If it doesn't, then cool. That's a lot of liquidity. I like this. I like it to do this, to be honest with you. If the dollar is more bearish tomorrow, right? But I like this in general. I'll be honest with you. I don't care whatever the direction is going. I like for them to wipe these people out, pop up here, wipe that out, and then continue back down. Where the fuck did you go? I do like that too. I mean, this is obviously if we're saying we're extremely bullish, but we could still do this and come up here. I don't know. All right, so I hope this helps you guys. Take care till tomorrow. God bless.